Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Tuesday. Just judging from the open here, I haven't been going for very long, only about 6 minutes. I'm a little bit further behind than I thought, but we're still in compliance. 6 minutes, pretty tight, not a lot of flow. It is kind of to the downside, though. So I think that we could get another slow creeper. Let's see here. It's the 19th today. We'll do our notes here after going through the charts. So you can see here in the treasuries, yesterday was pretty slow during most of our session, but they did eventually move down a little bit. We've had a little bit of a pullback, and now we're on the downside again in the treasuries going into the Federal Reserve meeting on Wednesday. So people are seeming to hedge against a hawkish FOMC this week. Coming over into the treasuries, well, they had a pretty good rally yesterday before the open. It was okay action through most of the session, and now here in the overnight, we're giving all of those gains back in the S&P 500, but it's still well within the range of the most recent action, and we're still looking pretty good over there in the S&P 500. All right. Oil continues to press forward, and yesterday and the overnight, we are now over 82. I think that we'd have to bump up a little bit higher than that before the market would really take notice and it would start affecting other markets. But again, this is a big story. It continues to push. Gold and silver still within their channels. Copper, and it's a little bit of mean reversion after a great rally earlier this month. Sorry, that was silver. Here's copper. There you go. Copper, a little bit of a downside in the overnight. And the Japanese yen getting hammered after the Bank of Japan decision and the dollar rising as a result. And then you got Bitcoin getting a pretty decent pullback here. A decent downside action. Let's see if they make it below 60,000. I think that the bulls, if and I do kind of think that this is manipulated. I think that they will want to keep it above 60,000. So you'll probably see a dip below 60,000 and a lot of screwing around down in here and then eventually higher. But we'll see. Maybe it's over. Maybe it's over. That would be unusual for Bitcoin, but it would kind of make me happy because I'm not a fan. So that's what we're looking at. Let's come over here. So I just want to note, I should do it like this. I should have overnight action. Oil still doing well and above 82. Okay, so flows today. Well, if we come back over here, I don't think we have a whole lot in the form of news today. We do have Canadian numbers at the bottom of the hour. We have building permits and starts. Red Book later, 20-year bond. Okay, so housing starts, 20-year auction, FOMC tomorrow. And it is a Tuesday, which maybe we'll note Monday was very slow. All right. I forgot to put my periods at the end of my sentences. All right, so I think that's the gist of what we got going on here today. Oh yes, we should also note over here, Bank of Japan decision weakens yen. Flows from Japan. Pretty important. All right, so that's what we got here today. If I miss anything, let me know. Good morning, Apol. Good morning, Alan White. We did get our news here, so let's see. Canadian CPI year over year was 2.8% versus an expected 3.1%, and that's probably what's pushing the treasuries up a little bit here. Good morning, Uzi. Building permits was 1.518 versus 1.496, and housing starts was 10.7% change month over month versus an expected 8.2. After a previous month reading of negative 14.8. That's some pretty positive housing numbers. That would kind of be a pull on the treasuries, but I think that CPI is what's pushing us up. These are pretty, low tier news events. So probably the flows coming off of the Bank of Japan and from people hedging for the FOMC tomorrow are probably going to be more important and dominate the action more. All right. Let's check out Twitter and other places and see if there's anything interesting going on over there. Bitfinex and Tether are making billions of dollars allegedly, but they still haven't paid back the Leo shitcoin they launched at the same time that FTX was launched. Curious. Yes, that's true. They did all of those coins and they didn't pay them back. I totally forgot about that. Nexo is still offering Ponzi APR rates on their platform while still being propped up by Tether. As long as an unregulated and unaudited money printer exists, crypto will be a manipulated market. I agree. I don't want to spend too much time bashing on crypto, but that's what's on my feed here this morning.
Block sell.
Interesting action. So they were kind of starting to accelerate on the upside a little bit there. I could kind of see it from the corner of my eye. And then a big block sell came in and about 3,000 contracts hit at 30. It took 5,000 to clear. That is interesting to me. So I'm going to make note of that there is somebody out there quite early on, by the way, being a little insistent on selling it here. Why do I have libs of TikTok in my trade? Oh, because Elon Musk retweeted them. He's pushing the illegal immigrant killed a citizen thing again. I like looking at Bitcoin's order book. It's funny, like, if you sell a single Bitcoin, it'd knock out like $400 worth of prices. Yeah. Like, people don't realize how illiquid that market is. Like, the one that sticks out in my mind the most was this guy, what was his name, like Bukele or something like that, who was trying to turn Guatemala, El Salvador, I can't remember where it was, but they were trying to turn it into like a crypto paradise haven kind of a thing. Yes. And is that the same place as where now they have like solved all of the crime problem? Well, let's not say solved, but really reduced their crime problems. Is that the same place? I should look into that. But anyways, yeah, the crime rate has plummeted. Okay, it is the same place. So that guy, is it the same guy? El Salvador presidents. Nah. Oh, yeah, Nayib Bukele. It is the same guy. So the same guy the same guy that basically addressed their crime problem is also the same guy that's been pushing cryptocurrencies. Gotcha. Okay. Well, anyways, I remember this one instance where he was like, you know, they bought it and the price went up. And they're like, see, look, we're up on our investment. And then like later that week, price sunk back down. And they bought like $1 billion worth of it or something like that. I was like, well, yeah, you bought $1 billion worth of Bitcoin. Of course the price freaking went up, you Nimrod. Like, it was so startling and frankly terrifying to me that somebody in such a position of power could be so naive as to how the market worked, you know? Like, I would have thought that you would have, you know, bankers and traders and stuff that would tell you these things. Let's say a lot of Latin American countries are experiencing similar things because their criminals are coming here by the tens of thousands. Like a handful of states are reporting roving Chilean burglary crews now. I would like to see, so this, to be honest with you, Uzi, this conversation bothers me a lot. Not that it's like, hey, these things could have potential impacts like increased crime rates in the United States and so forth, right? It's just like we don't have direct evidence of that, or rather, we don't have like a wide enough body of evidence to support that, right? What we have is anecdotal evidence from people that are saying like, oh, this girl, she was killed by an illegal immigrant and this and that. And you're telling me that's like the first time that somebody has been killed by an illegal immigrant? No, it's definitely not. It's just that now it is a narrative being pushed by the right wing. And I can see, I'm just telling you, because I can see it on the left, I see it on the right. I actually see it better when it's on the right because I've been involved in it before. Okay, not that type of thing, but you know, like influence, pushing influence to push certain narratives on social media for favored political candidates. Okay, like I've seen how that works behind the scenes, and I can just tell you that the Republicans are pushing that narrative. And I don't know if we have enough evidence to suggest that it's really actually a problem. It seems like it's working. It seems like it's working as evidence, but I don't necessarily want to be involved in that, you know? You can't have problems if every problem is just some narrative that can be contextualized away. Well, but you could go in and do the statistics and then find out that it's not actually a problem, right? But it does go the other way. Okay, like straight up, we know in general, and we know that it is happening in this particular instance as well, that when you have more immigration into the country, that increases the supply of labor and it suppresses wages. It does happen. This is a negative impact of illegal immigration that is happening here in the United States today. And the left always just ignores it, right? They only want to look at the positive impacts from their policy. It's always so myopic. Well, if I'm going to make a claim about like something that's happening in the country or the impact of a policy, I think that I need to have actual, you know, a sufficient amount of statistical evidence to back that up, and I don't think that we do on the issue that illegal immigration is substantially increasing crime in the United States. That doesn't mean that it should be illegal. But you do understand the what they're doing here, right? Why you say that is why it took mountains of bodies and snowstorms for people to believe there was a Holocaust? So it's one thing if you come in and you say this country is systematically exterminating a group of people, and then people say, well, you don't necessarily have a good enough evidence of that, or it was just one guy reporting it and they kind of ignored it, right? You're making a claim about a wide phenomenon. You're making a claim about a wide phenomenon of increased crime across the country that we can't back up. And I'm just telling you, Republicans are not pushing this narrative because there is substantial evidence of an increase in crime from illegal immigration. They're pushing it because they know that it's a narrative that helps their election chances. And it really, a white girl got killed by a Mexican really gets certain people's blood going. That's why they're pushing it. And I'm a Republican, and I think that illegal immigration is bad and that it has some negative impacts, but I'm not going to participate in that kind of bullshit. The way that they classify, there's a lot of research about crime is often misleading because the way that they will classify different crimes and the way that they will classify the race of the person that committed the crime and stuff like that, it's like they just don't have the information. It's like they don't want to know. It's true. But that doesn't, you're changing the subject. That's a changing the subject, right? If I'm going to push a narrative on the stream, I need to have substantial empirical evidence to push it, or otherwise it's irresponsible. Especially if it's something that has a really strong political component where people are going to push it regardless of whether or not it's true, and it has a racial component to it. I'm not going to be a part of that, right? I have certain responsibilities. I don't think that we have to. What should I call this? I just don't think that we have to go down that kind of a road to say illegal immigration is bad and that Joe Biden's policies have been bad. Right? Yes, Utah has a sex offender registry, I believe. Not that I've ever gone and looked at it. I think my wife has, though. I'm pretty sure she's talked about that. She is way... I tell you what, I don't think she was like this when we got married, but as she's gotten older and then when she had more kids, she has become substantially more alert and on edge. So it's if there's a story about kids were approached by a guy in a van or something like that, even if it's one crazy guy, all of a sudden it's a huge deal. We can't let the kids walk to school anymore. Okay. The quality of the data is poor. That's true. But now you're implying that there is a significant increase in crime and sex and murder across the country because of illegal immigration, and we just don't have the data to prove it, right? So now it's a conspiracy theory. Well, there was that big order at 30, but they continue pushing up, and I'm more interested in the downside. I mean, it's been like that with me for pretty much all year, but I'm not quite sure what to make of this upside. Maybe they think that decline in Canadian CPI really is significant. Okay, so then what do you think we should do? Just make assumptions and push things regardless of whether or not we can actually know if they're really true? We should do nothing and go, but you do give a shit. You're you bring the narrative up, and then when I kind of point out problems with the narrative, I'm just telling you, this is the only thing that's important to me. We understand that white girl was killed by an illegal immigrant is the Republican Party's like social media operation primero right now, and that's why they're pushing it, and not necessarily because it's really a true thing. You're gonna wait for data until there's a gang of masked Venezuelans in your house robbing you? Well, I'm certainly not going to come in and say, well, it's not a problem, so we should just continue to let people come across the border. No. Right? We should secure the border. We absolutely should. I don't think that I have to scare people to convince them that needs to happen, right? Pretty much everybody in America believes that what's going on with the border right now is unacceptable. Even Democrat. I tell you what, you want to see something funny? Go and find like the leftist subreddits and try and find a thread about the illegal immigration. Even on the far left subreddits out there, there is substantial amount of disagreement on the issue of illegal immigration. There will be people that will push the Democrat accepted party line, which is that having more people come into the country is ultimately good for the economy. And these other people come in and they will just rip that to shreds. And they will point out every other little thing about the illegal immigration, every negative impact, and why it's important to have a border. So like even the far left isn't completely buying into their own BS on it. So I don't really have to do a whole lot to convince people that, hey, what's going on with the border isn't okay and we should change it. It's just a question of how much they're going to factor that into their voting choices in November, right? That's where I think it starts to come into some of these things like with voting and stuff. I think, Elon Musk, he has really been pissing people off with what he says on Twitter. And it is primarily because he is pointing out the things that like we know are happening or we know are an issue, but we're told to be quiet about it. Right? Like there's plenty of things that we can actually cling on. Like for instance, that illegal immigration affects how many, it still gets counted in the census. So the illegal immigration is affecting how many house seats you get. And they've done studies on this and quantified the difference. Like, we know that Democrat states got more votes, electoral votes, more House votes because of illegal immigration. We know that that's a thing. We also know that there is not a whole lot put in there to prevent illegal immigrants from voting. They're not supposed to vote. This one pisses me off, really, because every time they bring this up, they're like, the illegal immigrations can't vote. No, they're not supposed to vote, but there is almost nothing in the way stopping them. At this point, there's no reason to have words. We're irrevocably broken the whole system. As an employer, I'm just leaning towards blanket amnesty policies so I can hire them. Yeah, and now with 10 million of them dropped in the country in the last 3 years, genie's out of the bottle. While y'all wait for the data, ain't no one going to deport those people at this point. Yeah, nobody's going to deport it. The demographic future of the country has irreversibly been changed. That's another one. That's another one where, like, it's very clear from the data, but then if you bring it up, you're saying an awful thing. That's funny because here I come in and I push back against one narrative, but then I bring up all of the other ones that probably pisses them off even more. Like the white replacement thing, okay? It straight up is a thing that white people will probably not be the majority of the country in 100 years. They won't be. That's straight up like the demographics. And people on the left are happy about this. And there are people on the left that want white people to be minorities. And they are intentionally pushing policies to make white people a minority. And they do this openly. And then when we point it out, it's a conspiracy theory. No, it's not a conspiracy theory. That's just their ideology. And they succeeded. They did. You can make up your own decisions about whether that's good or bad or doesn't matter, but it is happening. Which is why I don't know about that the Republican Party is doomed as fuck because of that. This is where, like, it comes back to all my life, frankly. All my life, we've been told the Republican Party is doomed. And then it doesn't turn out that way. Why? Well, because parties evolve over time. People evolve over time. Like, coming back to this thing that we were talking about last week, right? Donald Trump has more support among minorities than he did last election. Minorities as a whole are starting to move away from the Democrat Party because they are starting to realize that the Democrat Party does not actually represent their interests. They push illegal immigration so that they can get, like, the minority vote. But then when it comes down to, like, almost everything else that they do is not what that demographic wants. And so they're starting to leave. Candidate who's being lawfared out of existence. Well, so do you think that that's going to be? So the story this week has been that Donald Trump cannot pay for this judgment. I think that the judgment that they're getting, that, like, if they were able to appeal it up to the Supreme Court and everything, that this would be found to be unconstitutional, or, like, I think that the Supreme Court would rule on his side. For instance, that the judgment that was given against him was unreasonable just on the monetary amount, and that the policy that they have where, like, you have to put the money up before you can even appeal, that's wrong. But right now they're saying they don't have the money. And it's like $500 million, which is, like, really, actually, when you think about it, quite crazy, right? Like a lot of companies, when they get fined, their fines are smaller than that, right? And you're doing this against an individual. It's absolutely the case that they intend to use lawfare to try and prevent Donald Trump from being elected president. But I don't think that that's going to stop him. I don't think that that's going to stop him. Oh, you're right. Alex Jones got hit with $1 billion. I don't think that that's going to stop him from running. And right now, Donald Trump, if we had the election today, I mean, it still comes back to this fundamental belief that you have that, you know, we can't prove necessarily, right? So we're just kind of taking this on faith that if the election were held today, that Donald Trump would not win, even though all of the polling says that he would. Because the polling doesn't account for all of the shenanigans and election fraud and et cetera, right? I don't know if it'll stop him from winning. I to be honest with you, I think it's helping him. I think that everybody looks at what's going on here and is like, well, you wouldn't have to do that unless he was going to win. And why would he win? Isn't the orange man bad and everybody hates him and he's a dictator and so forth? But most Americans don't actually believe that. Most Americans still remember when he was president and remember that even though there was constant histrionics and drama every freaking day, that he didn't actually do anything all that crazy. They were constantly fretting that he would, but nothing happened. I think it's helping him. I think it was one of the primary reasons why he ended up being the nominee. Because all of that news media, it just sucked the air out of the room. I think that it's driving his support. And taking a look at this over here, we're still to a point where, like we could move a little bit higher, I think. ZN is at highs of the day, though. 04 is about where we were yesterday, so there's something else I want to talk about, though. That's if I could segue, like talk about kicking the hornet's nest. Oh man, maybe I can just find the let me find the article for you. I read a lot of Hot Air, so I picked up on this from Hot Air, even though I follow Larry on Twitter. But Larry Summers says that inflation is much worse than the government says. Okay. Larry Summers, Treasury Secretary under Clinton and economic advisor to Obama, is likely getting himself into trouble again with the left. Oh, I think he's getting himself into trouble with a lot more than just the left, and I think you'll see why here in a moment. While president of Harvard, he blurted out the obvious fact that men and women may be different, leading to a vote of no confidence by the faculty of Harvard. And since Biden's election, he has been critical of president's economic policies, warning that they were harming the economy. Well, he's done it again, this time in an economic paper that provides the explanation for what the left calls the, quote, vibe session. The persistent belief by Americans that the economy is much worse than the official statistics indicate. Okay. In the new NBER paper, we argue that the unprecedented increase in borrowing costs is crucial to explaining the low consumer sentiment of the last 2 years. With high rates, mortgage payments, car payments, and other credit payments required to finance everyday purchases have risen as well. It is not surprising that this would affect how consumers feel about the economy. So this one is kind of a no-brainer, but it does kind of make you be like, yeah, why weren't they talking about that? Because this is what everybody already knows. You can't afford a house. If you're going to buy a house today, hardly anybody can afford it. I'm pretty much at this point rich. I would have a hard time buying a house right now. It would be very difficult. I would be able to do it, but oh man, it would make me unhappy. I would probably be paying like 3 times as much as I pay for my house right now. It's crazy because of the borrowing costs. And guess what? Like, that's not factored into inflation. Well, so let's talk about that. No doubt you have seen all the arguments from pundits that Americans are somehow wrong to believe the economy sucks for them. Panicked administration officials and mainstream media folks keep telling everybody that things are great and point at all the economic numbers to prove that to be the case, yet nobody is buying what they are selling. Summer explains why. The way that the numbers have been calculated has changed so much since the 70s and 80s that they don't capture the true misery that people are feeling anymore. The difference, the rise in interest rates, which increase the cost of purchasing goods, if not the goods themselves, are no longer measured as part of inflation. And then they quote from the article, unemployment is low and inflation is falling, but consumer sentiment remains depressed. This has confounded economists who historically rely on these two variables to gauge how consumers feel about the economy. We propose that borrowing costs, which have grown at rates they had not reached in decades, do much to explain this gap. The cost of money is not currently included in traditional price indexes, indicating a disconnect between the measures favored by economists and the effective costs borne by consumers. We show that the lows in U.S. consumer sentiment that cannot be explained by unemployment and official inflation are strongly correlated with borrowing costs and consumer credit supply. Concerns over borrowing costs, which have historically tracked the cost of money, are at their highest levels since the Volcker era. We then develop an alternative measure of inflation that includes borrowing costs and can account for almost 3/4 of the gap in U.S. consumer sentiment in 2023. Global evidence shows that consumer sentiment gaps across countries are also strongly correlated with changes in interest rates. Right. As what we've been saying. So I think that there is a part of this. Some people might say, well, this is this argument that inflation is lower than we're being told, or that I don't think that that's necessarily what this is. So there have been changes to how inflation is calculated over time, and there are very good reasons for those changes. I think the reality is that the inflation measure that we had, like in the 50s, was not very good and would not be very useful. Well, it wouldn't be as useful today. Okay. But one of the primary reasons that we have the inflation measure is so that we can make monetary and fiscal policy decisions. Right? So because the Federal Reserve is using that to make its monetary decisions, it doesn't really make sense for them to include the cost of borrowing in their inflation measure, because that's the thing that you control. So if the thing that you control, factors into the measure that you're getting, then it's just like extra noise, and it makes it harder for you to know what you're doing or what you're actually going to do, right? So that's why it's like that, okay? But if your goal is to try and explain why Americans feel the way that they do about the economy, you have to factor that in, because higher interest rates are very bad for consumers, generally speaking. And this is what we've been warning about the whole time, is like, yeah, you can print a lot of money, but then you'll have to increase interest rates, and that's bad for everybody. This is never talked about. There's a reason that this isn't talked about, and Larry Summers coming out with this study and basically saying that out loud is going to upset a lot of people, I think. Let's see here. What did he say? Since Okun invented his misery index in the 1970s, economists have looked at unemployment and the inflation rate to gauge consumer sentiment, but now that unemployment is low and inflation has declined, consumer sentiment remains suppressed. Pre-1983, mortgage costs were in the CPI, as were car payments pre-1998. Now price indexes do not include borrowing costs. Thus, when interest rates jumped last year, official inflation did not fully capture the effects it would have on consumer well-being. I hate when every time I try and highlight that, it takes me over to Twitter. Many people have seen their mortgage payments skyrocket, and anybody who needs a mortgage to buy a home today is absolutely screwed, as the cost of money they are borrowing is more than double what it was just a few months ago, and house payments are determined by interest rates more than anything else. This means that the income necessary to buy the same home has jumped dramatically along with interest rates. People will be paying a lot more for the same house or buying a smaller home in a worse neighborhood for the same money. Assuming a home can be found, people with low mortgage rates don't want to sell because they have a good rate locked in and don't want to get a new mortgage at a higher rate. You can add to this already miserable situation the fact that price spikes stretched budgets for many people, and they started using credit cards at high interest rates to make purchases, adding again to their payments to interest alone. In the paper, we show that the variation in the current University of Michigan Index of Consumer Sentiment, which cannot be explained by official inflation and unemployment, has historically shown a strong correlation with proxies for borrowing costs. We also show that the underlying questions in the survey provide direct evidence that concerns of consumers about borrowing costs are at historic highs, surpassed only by the Volcker era. But that's the problem, though, is like if the depressed consumer sentiment is purely due to borrowing costs, so the only way you get around that is for the borrowing costs to come down, which means that you have to, what? You have to cut interest rates. But guess what? As soon as you cut interest rates, consumer sentiment is going to improve, and that is going to lead to people buying more stuff. And so the instant that you cut interest rates, the economy is going to overheat. I think this is how it's going to go. I think that the Federal Reserve will cut interest rates this year. I think that they will cut 2 times, not 3. I think they will cut 2 times this year. And as soon as they do, everything will start to overheat and they will have to rethink it. And it might even lead to them increasing interest rates again in 2025. That's what I think is going to happen. I think that they're going to do like a little head fake. As soon as they cut interest rates, it's going to flip around and they're going to have to start raising them again because the fluff hasn't been taken out of the economy. They're holding a really tight, monetary policy, but a very loose fiscal policy. And so it's very easy to overheat the economy. And I also think that what will happen is, you'll get a Donald Trump president and they'll blame it all on him. But then it will be like, well, yes, but the reason that everybody is buying, that the economy is overheating is because Donald Trump got elected, because that's good for the economy. And then they have to raise interest rates. Gotcha. So it's going to be a thing. You watch. It's going to be, if Donald Trump gets elected, it's going to be a thing, I think. But this part of their article I don't agree with. It doesn't even require conspiracy theory to explain how innocent changes in the statistical measures of phenomenon like inflation can dramatically change our perceptions and make apparently similar measurements wildly different in reality. No, I think quite the opposite. What this study shows is that the number doesn't matter, that the way that people judge their economic situation is in what they experience in their actual daily lives. And if the Biden administration is cooking the numbers, and I know that a lot of people on the right believe that, but if that is what's going on, it's only going to hurt Biden in the long run. It's only going to hurt the Democrat Party in the long run. Because you can see that even though all of these numbers look good, people are still unhappy because those numbers don't really reflect their situation. The numbers are a way for us to make policy. They are not there for trying to influence the public to buy things. The public doesn't look at those numbers. I think that there's this thinking among the people on Wall Street and the people in politics that like, we need these numbers to look good because that's going to affect people's perceptions and make it more or less likely for Biden to win the election. But the reality is that the number doesn't matter. What matters is the actual underlying economic conditions for everyday people. And if the number does not match the reality for everyday people, it doesn't change their sentiment. That's what this study proves, right? And the study proves that raising interest rates has a substantially negative impact on consumer sentiment. So this is a problem. because again, that the issue is that the thing that you do to fight inflation, because consumers don't like inflation, or inflation being too high rather, the thing that you do to fight inflation is you raise interest rates. And raising interest rates increases all of the costs on people. So I'm not going to call it that it raises inflation. That kind of depends on what your definition of inflation is and things like that. But it does strain people's pocketbooks, right? That's the whole point of it, frankly. But saying that is kind of a big problem for a lot of policymakers that are kind of pushing this idea that like it doesn't matter, right? Especially these modern monetary theorists, right? Because they think we can just run a crazy deficit forever and we should just spend even more and more and more. And they don't think that that's going to come through to higher interest rates and then hurt people because of that, or a weaker dollar and hurt people because of that. Like that, there's always a pressure valve that gets released somewhere, guys. See, this guy, he's trying to make this case that it was like, whether the changes how inflation measured were done innocently or were part of a strategy to bury inconvenient data is in the end not relevant to consumers. But I think that they're kind of missing the big thing here, which is that you don't really want that measured in inflation if that's the measure that you're trying to use to judge what interest rates should be. But you do want it in there if you want to judge the impact that it will have on consumers, right? I haven't seen a whole lot about this study outside of Larry Summers on Twitter and like the conservative media, but this is like a huge finding. Because like the whole media has been going on and on about this for like the last freaking year. And everybody's been telling, every time that this comes up, I say it's because nobody can buy a house. So because nobody can buy a house, they don't care. Like, okay, everybody has a job, but nobody can buy a house. It doesn't matter. And they're all just kind of like, oh, what's the problem? Oh, like being willfully ignorant, and then Larry Summers just comes in. Larry, you know what? I like Larry because he's just an economist. I mean, he's left-leaning, yes, but he's just interested in the data and understanding what's going on. And so here, that's what he did, is he went and he found the thing, the thing that everybody was talking about, and found the right way to do a study and explain it. And the problem is that they didn't want to explain it. The politicians and the media didn't want to explain it. Because now that it's been explained, right? The real question that people should be asking for the election is, what are you going to do about the cost of housing? If you were a politician, any politician could come out of nowhere and just say, here are all of the policies that I'm going to do to reduce the cost of buying a new home, they would win. Because that's why people are upset. Donald Trump, for some reason, doesn't really spend a lot of time talking about it. Joe Biden, obviously not going to talk about it. Obviously not going to talk about it. Yeah, increase housing prices by giving 10 million free ones to immigrants. Yeah. Or what is it that they're doing in California? Like give you an extra money to make your purchase with. Yeah, okay. So the reason that we got into this mess was because we printed too much money. So how do we get out of it? Let's just print more money. I tell you what, it's funny because the liberal answer to everything, like when a liberal policy fails, the liberal answer will always be, we need to be more liberal. That's literally what they'll do, and 50% of the country will support it. I hope that it's not 50% of the country. I mean, so Joe Biden in his State of the Union address, he said that he wanted to provide a first-time tax credit that would be paid out monthly to help you afford a new home. That's almost certainly going to increase the cost of housing. And I think that anybody that has even a basic understanding of supply and demand understands that. So would 50% of people be in favor of that policy? If that's really the case, then we're probably doomed in the long run anyways, right? Because the stupid thing to do is too popular, right? What's this? Studies are a function if you paid for it. If you work and can't afford a home or living in general, it's called indentureship. Well, okay. That's a loaded word, but maybe. Depends on how you contextualize it. That's true. Like if I was doing a phone survey and I said, this is the policy, do you support it? And I think you would probably, I don't think you'd get 50%, but I think you'd get maybe like 40% of people would maybe say yes. But then if you would explain the possible negative effects, the possible positive and negative effects, then I think that the support would drop down to like 10%. Yes, the fun part about people who fancy themselves intellectuals is that they're in some instances easier to manipulate than idiots. I think so. Well, because you create a framework in your mind about how you determine whether things are true or not. Most people kind of just go based off of what they've been conditioned and how they kind of feel. But when you go through the school process, they kind of ingrain into a way of determining whether things are true that is based primarily on authority. And so all you got to do is have the authority come out and say something and they believe it. And you are in a tough spot because if you're somebody that really just believes in science and in empiricism, a lot of the key situations you can't really determine what the truth is through empiricism because you don't have quality data. Is the word epistemic grounding? I mean, I hear the word epistemic thrown around a lot, but when I look up the epistemic grounding, I don't see anything. But I think you're kind of on the right track, right? Because like epistemic shock. Because epistemic means like relating to knowledge and like, well, if I search for on dictionary, it says, or the degree of its validation. So like when aliens come along, people talk about epistemic shock because that's basically like they've spent 100 years telling us that there weren't aliens. And then if it was proven out that the UFOs were real, then people wouldn't, that would completely destroy people's perception of like what is true and what is not true and what can you trust and the government's role and all of that and so forth. Okay, so yeah, we can answer your question here, Dylan. I think we're in a good pausing point here on this discussion. I'll go on this, and then if you guys have more comments on what we're talking about before, we can go back to that. So I enjoy hearing your take on things, and I don't want to interrupt, but I was wondering if at some point you could briefly describe what you focus on in trading. I've checked your website and watched several videos. I gather that you mainly focus on bonds and the DOM. Is that what you been focused on for a while? Yeah, if you want to pivot to UFOs, that's fine with me too. There's been some interesting developments in UFOs, but I don't know what to think of it yet. Okay, so my approach is essentially this, okay? If in order to make money, you have to predict future orders. Every time that you've made a trade and you've made money off of that trade, what you've essentially done is you've effectively predicted what the future orders will be. You might not be consciously doing that or thinking of it in that manner, but that's what happens because you come in and you take your trade, and then it's up to future orders in order for this thing to move. So once we understand that it's orders that move the markets, that kind of gives us a framework. Now, okay, so the thing that if we want to, get returns, we want to predict future returns, what we really actually want to do is predict the orders, right? So what I do is I come in and I say, what are things that I might know today that might affect the orders? So I have that here on our little notepad that I bring up at the beginning of the day. I note, okay, there was some overnight action, so oil is doing really well, and the Japanese yen got hammered because of Bank of Japan decision. So now here today, with the flows that we're getting, I should have put over in here because it did matter too. Is Canadian CPI. So we got the Canadian CPI and the housing starts, and that kind of started some buying in the treasuries, right? But we do have an FOMC tomorrow, so a lot of people are going to be staying out of the market and not participating because of that. We are getting these flows from Japan, which are a little curious. So these two flows at the top may not necessarily be as important as some of these other flows. So like I expect that to peter out, and then these flows to kind of take charge, right? There's a 20-year auction, so when there's a 20-year auction, they tend to sell into the auction and then buy up afterwards, right? FOMC, well, that will prevent a lot of people from really taking active positions in the market, but it will also cause some hedgings. And what we're seeing right now seems to suggest that people are hedging short in the treasuries, right? So I can kind of combine all of those things together and say, I think that the overall flows will be negative. And then I'm coming up here and I'm watching the treasury for things that might back that up, for flows that would be in line with us moving down. And if I don't see that, which is basically so far we've bought up, and in fact, if I come back over here, the chart, and I look at the 10-year, I look at cumulative delta, right? Yeah, we moved up by about 30,000 contracts. So that is definitely not in line with that scenario that we should be going short. So I don't have a trade, right? And that's essentially how I do it. So if you're asking like, what market do I focus on? I focus on the treasury market, because the whole thing is knowing my market and the things that tend to produce orders in that market so that I can predict future orders, right? And that is my approach. So what do you look for to enter basically absorption on the DOM? Do you always form your bias on news or ever just technicals? Okay, so when it comes to technicals, so we're going to be making a video about this soon, and I just haven't gotten myself around to like writing an actual video, but I need to move on that. So one strategy from a tech that we could maybe consider technical, although really, like, what is the definition of technical analysis and everything, and it's all this sorts of, so I don't even necessarily like to use the term technical, okay? But there is a strategy that is known and is effective, and it's called momentum. And many of these big hedge funds and people that made tons and tons of money, they were trading momentum strategies, right? Go back to your 10-year chart. How is your delta negative? That's a good question. So I don't ever reset it. So it starts at 0 going back 15 days. So that's just, it's negative relative to however far back, right? I just do that because it helps me know where we were at relative to yesterday, as opposed to like resetting every session. Because I can just look at where it started at the session to know where we are relative to the session. Okay, anyways. So a momentum strategy, the way that a momentum strategy works is you'll have some sort of an entry signal, and then you're waiting. That entry signal is basically set up to catch the first part of a trend. And if you take every first beginning of a trend, even if only like 20 or 30% of them actually end up being real trends, you make so much money on the trend from holding it that it makes up for all of those smaller losses, okay? But there is a problem with this strategy, and the thing about this strategy, well, two things I think that a lot of retail traders don't realize. The first thing is that momentum is a portfolio strategy, which means they're trading a basket of goods and not just trading one stock, because you might have one stock, it might not be in trend for years. Okay. So trying to do it with just one asset, you might have a bad time. The other thing is that momentum strategies are typically done on high time frames. They're looking at daily charts for their entry signals. They're holding these positions for weeks or months. Okay. So I can come in and I can look at over here, come over to like my daily charts in ZN, for instance. Earlier this year, maybe my momentum strategy, depending on where how I had it set up, might tell you to go long somewhere in here or in here and then get out somewhere over here. Okay. And that's the way that you do it. So during this whole time period, when I come in for my flows, one of the things that I should be saying to myself is, we do appear to be in momentum long in this instrument, but I'm doing it from a daily basis, right? Right now, it's unclear if we have momentum to me, so it's not listed as a flow, okay? So that's where technicals, again, it's about whether or not that thing will predict future orders. So this trend, there's a lot of big funds that trade it. So yeah, it can predict future orders to some extent, maybe. Maybe some of the edge has been taken out, but I think that it's still somewhat useful. As for like what I look for to enter, I think that the thing that I'm going to care about the most is I want to see autocorrelation in the sign of orders. So if there's some big guy out there and he's buying it and he needs to buy 60,000 contracts, then what I should see is a persistent imbalance between the market buys and the market sells. So absolutely, this trend that we saw here in the 10-year, right? We went from basically negative, what were we? Negative 22 to -5. Yes. So about 15,000 contracts long, right? And you can see in the cumulative delta, right? This nice, pretty consistent trend, right? That's what I want to see is I want to start to see this autocorrelation. Now, what I should also see is if I'm really getting the sort of move that I want to see, there should be like, they will create a liquidity hole, which is this thing right here, right? You see where it's kind of gone back and forth across this price a lot, right? It's stuck here, okay? If they still need to buy, this is going to sit, and it's going to be like this for about 45 minutes. So until about right here. Okay. And then we should see it move up. And I should start to see, okay, we go over to here. And then I should start to see that cumulative delta, that autocorrelation in the cumulative delta come back. Makes sense? So autocorrelation in the sign of orders is the most important thing that I look at. I'm reading all of these other things, like, you know, I'm looking at the DOM, I'm watching where the icebergs are, I'm watching how much it takes for them to tick up and down, I'm watching how orders stack and pull on the DOM and all of that sort of classic stuff that you hear me talk about in my order flow video series, right? But those are all kind of tea leaves. And those all have to be read in context with what flows do I expect to see today? Am I actually seeing those flows? Right? I have a really strong reason to think that we're going to have flows to the long side or to the short side. I don't need a whole lot of that autocorrelation to say I'm going to get in now, right? And I want to take it as soon as possible. I don't want to have like some set signal, some set list of conditions that everybody can see, because the market is very good at, you know, removing those from the markets. And I want to be in as early as possible, right? Like I'm going to err on the side of getting in too early, as long as, you know, I get the flows that I actually want to see. If I get in too early and I start to see the flows go the opposite way, I get out right there. Okay, so why bonds? Yeah, so I do have a video where I kind of talk about this stuff, but basically, you know, if we're trying to predict in future orders, a large part of that is being very informed on your market. Okay, so if I had worked for an oil company, I would probably trade oil. Or if I had worked for a copper mining company in the past, I would probably trade copper, because I might know some things about that market and that would help me understand what the supply and demand in that market is at that time, right? But since I don't have any of those things, where do you go? Well, I think that one of the best places to develop that kind of knowledge is in the interest rate world, because there is constant flow of steady information relevant to that market that is very accessible to retail traders. So I find that it is a little bit easier. There are some flows that are very difficult, like what's going on in the corporate bond market, very, very difficult for us as retail traders to follow. Okay, they are going to get a corporate bond index, I believe. So maybe things will change there. I don't know. That would help. Okay, but so I think it is easier to develop that informational edge in the treasury market. Most people, they go over into equities. You're trading individual equities, you can certainly do that, right? You have to be kind of in the know on what companies are doing what, and to be able to predict, you know, who's going to be popping off that day. But in the indexes, it's super hard because there's so much information that you have to track, and it just kind of all becomes noise, right? And then the last thing, well, the other two, is that the treasuries have so much liquidity that even in very volatile markets, you can still trade it. And that's very, very useful, especially if you're trading like economic releases and news events and stuff. And then the other thing is that because it's so liquid, the more liquidity that there is in the instrument, the more predictive signals you tend to get. So for instance, like, you know, they have to rebalance their portfolios at the end of the month. And so you tend to see moves usually to the upside in the treasuries at the end of the month. And this is a very consistent flow that you can study and you can see, right? And it's because there's so many big guys out there that participate in this. So there again, it provides more opportunities for you to actually trade. And then last, and maybe even the most important, is that bonds require the least amount of risk to realistically trade as a retail trader. You take on very, very little risk, that keeps you going for a long time and gives you more of a chance to actually find success. And I've tried switching to other things, but then I come back. Well, they have pulled back from that high. It's been a while. We're in a period where we might see a second leg, but I don't think there will actually be a second leg this time. I could be wrong, but I don't think that there are really... I still think that if there's any flows, they're to the short side. But given that we moved up and I haven't really seen any kind of pushback against it, I'm going to guess that we're going to rotate around 0.2 for the rest of our session. We'll keep an eye on it, especially for the next 10 minutes, 10 to 20 minutes, because that's a time period where if there is going to be a second leg, that's when we see it, right? And I suppose if we do start to get strong enough indication that that's what's happening, we might jump on board. But I'm unlikely to, just because my synopsis of the flows was short. was short to mixed. Like, one of the things was when we opened, I didn't see a whole lot of activity, so I'm kind of expecting today to still be relatively tight because of the FOMC tomorrow, right? What are the average number of trades per day? 0. I maybe take like 3 trades a week these days. Depending on how well I've been doing. I did not do very well in January, so I've pulled back significantly on trading. Kind of dipped my toe back in the past week or two, and I've done okay with the few trades that I took. But so the thing is that, like, I need to have like an actual, like, really clear divergence. Like, I'm really expecting the number of orders that have to buy that day versus sell that day, that there's going to be a really wide gap between them. And that doesn't happen every day, right? So I'm extremely selective. I am not, it started that way, but I am not the guy that comes in and takes like 10 trades in a day and yada, yada, yada. That's like more like a high frequency trading world. And I've found that it's extremely difficult to be competitive in that world, and that most retail traders that think they have an edge over there, it's just an illusion. So I stick to the things that I have empirical evidence to back up. Of course, I might not be able to prove that it's like a profitable strategy, but I have some empirical evidence that suggests, with a little bit of logic, that it could be fertile ground for a trade, right? And I'm going to be really selective, only trading when I think that I have that advantage. He was a Mexican? What? So going back to our discussion that we had earlier, like, the thing that I keep seeing in society, so we were talking about, what was it? Epistemic grounding refers to the relationship between beliefs, knowledge, or proposals, and the reasons, evidence, or justifications that support them. Epistemic grounding can involve various factors, including empirical evidence, logical coherence, rational inference, and perceptual experiences. And we were saying that a lot of it is, if you go to college, you respect authority, and you don't necessarily, you just kind of overlook the systemic issues with the way that research is conducted at universities. That's not to say that, like, all of that research is bad or anything, but it does suggest that there are going to be places where our knowledge isn't very good, or where things are kind of being ignored, and you can kind of predict where they're going to be if you know enough about how the research system works and stuff, right? When you do poorly in a month, is that necessarily a sign to be risk adverse or to put more money on the table? So I will be more risk adverse because essentially I'm trying to predict the future orders. So if I'm losing money, I'm not predicting the future orders very well. So what that means is I don't understand that market very well. I don't understand the things that are driving that market and seeing them before they come. And so, I want to trade less until we get to a market where I really understand what's going on. Anyways, but the thing that I keep seeing in society is like people are way too confident. People are way too confident about what they think they know and don't know. Especially younger people. Like, it's so startling to me the number of like political discussions that I'll see online, for instance. And then I'll come out and realize that the people that are posting this are like, younger than 26. I mean, I'm a little ADHD, so some of my executive functioning kind of develops later. I really don't feel like that I was really on top of things until like 35, maybe. And I'm sure that 10 years from now, I'll look back on the things that I didn't know and that those will stick out to me as well. Like, the reality of the world is that this is like the entirety of knowledge, and like this tiny little point is like what one person can know. And so for one person to come in and say, I know the way that things should be, you come and you follow my plan, and then we will rule society, is kind of crazy, right? Well, I think that there's evolutionary reasons why that would happen, right? Because if you come in and you make that kind of risk, let's say, and you're successful with it, then you're probably going to have a lot of kids. Your kids are probably going to do really, really well in the future, and those genes get passed on. And so I kind of think that we have this tendency to like overestimate our abilities. And there are like social evolutionary like benefits to doing that. But when we've come into the level of society that we have now, where a lot of the easiest problems have already kind of been solved, now we have to deal with the more difficult problems, and the more difficult problems tend to lie in where we have our biases or where it's difficult to see what the truth is, etc., etc. That's part of why I'm always leaning towards, well, we don't really have the information to prove that. So how can we come out and say that is what is going on, or is what's going to happen so confidently? Because to me, with saying it live to an audience of a bunch of people every day, to me, coming out and saying something that I can't really back up is really what irresponsible. It's a really irresponsible to do that. And I'm sure that as much as I try to avoid doing it, I probably do it every day still, because that's people, right? That's human. A federal judge has ruled that the Second Amendment applies to illegal immigrants. Okay, well, I'm sure that you get a judge, you could probably rule that one any number of ways, and I wouldn't be too interested in it unless it was like one of the circuit judges or if it was the Supreme Court. So I give you an example of how this stuff plays out in society, because I think that a lot of your knowledge, effective knowledge, comes from experience. The older I get, the more I feel that like experience is a necessary part of learning. If you go in and you memorize something, or let's not say you memorize something, let's just say you read about it in a book. doesn't mean, that you know the thing. It's like in Dune, and Paul, he was watching all these videos about the Fremen, so he thought that he knew about the Fremen and he knew how to sandwalk, and then he actually gets there and he doesn't really know anything. He knows enough for them to be interested, but he doesn't know how to sandwalk, for instance, right? Because you have to do it, and you have to have somebody sitting there watching and relating their experience to you as you do it in order to learn it. And that's how the brain builds those pathways and actually creates effective decisions to deal with certain situations. You can't read a book to learn how to walk. You have to actually practice trying to walk and falling and building those brain cells and neural connections. In fact, we find it difficult to get a robot to walk, to just like create all of the equations and all of the processing and stuff that a robot needs to be able to walk. Really, really hard. So you know what we do? We create neural networks and use machine learning and train the robot over time until you get a wide enough neural network / repository of experience. And then you get, like these dog things like the Boston Dynamics that have, right? So that's the way it goes. So like experience really, really matters. And what I see out in society is I see a lot of people that want to opine on things that they have no experience with. And they intentionally prevent themselves from gaining certain experiences. They will not gain the experience on the thing, and then they want to turn around and opine on it, right? So like, have you seen all of this crazy stuff with like some of the rules that they want to implement in schools and stuff, where it's like, if a child is misbehaving in class, we don't want to remove them from the classroom and send them to the principal's office because maybe they just want to be suspended, right? Well, but the reason that you remove the kid from the class is because it's disruptive to everybody else. And if you just allow them to continue to disrupt the class, it just negatively affects the education of everyone. And so some people are kind of holding some of these ideas as like articles of faith and attacking anybody that opposes these ideas, even though we don't have any real empirical evidence to suggest that these methods are effective. And then when we do the evidence, it turns out that they're not effective, but then everybody that's already bought into it and turned it into a religion, has to go like whole ham hard against it, against the truth. It's crazy stuff. And I'm sitting here like, I'll go on Reddit and I'll read threads about this sort of stuff, and it's so obvious to me that all of the people that are commenting on this are kids. It's like, oh, we kids should not be watching pornography. So let's make it so that websites have to verify whether or not they're an adult. And then everybody on Reddit doesn't like that. And I'm like, I wonder why. Maybe it's because you're children and you shouldn't be watching it, but you want to watch it. Right? It really, really, really gets me going when people want to make opinions about how society should treat children without having raised children themselves. The politician that I am most suspicious of is the politician that has never had children. That to me is like, just because I know that there are like hormonal changes, there are life changes that happen when you have kids that you just can't compensate for. There's people after they've had children, they tend to vote different. There's very good reasons for that. And all of the people that haven't had kids, if you haven't had kids, take a step back and ask yourself, what do they know that I don't know that this experience that I haven't had yet? Right? So it's kind of funny because what we're seeing now is we see groups kind of like removing themselves from certain kinds of experiences, right? So like the Republican Party, they do this, like it's so bad because the Republican Party in the modern day is is not really so much like a conservative party or a nationalist party or anything like that. It's an anti-government party. The Republican Party, I would say that the biggest, most unifying idea of the Republican Party today is being anti-government. And so what the result of that is, if you're anti-government, you don't really want to go into government. Like, you don't want to work for the government or be the person that is doing research on what kind of policies we should implement for the government, or maybe not even being a politician, right? And so what ends up happening is everybody in the academic world and everybody in the government world ends up being a Democrat. And then that creates this huge ideological bias. This is like watching economists. All basically a huge portion of the economic field at universities is basically down to studying how X government policy will be a good thing for people, right? And it's always so myopic too. They never look at like, hey, here's this one factor that if we look at this, that'll be beneficial for people. Well, yeah, but what about all the other impacts? You don't honestly think that you know everything about how that's going to impact. Again, overextending our experience. But if there's like an ideological bias to it, then it really gets messed up. And so a lot of the problems that we have economically and when it comes to government, I think come down to the fact that conservatives have basically left the left to do everything because they're so anti-government, right? It's a big problem. It really holds the Republican Party back significantly. You come up with policies that are dumb because they don't know what they're talking about. And then, even if you do get somebody that has some good policies they want to implement, they have trouble implementing them because the entire establishment fights against them because none of them are Republicans. Everybody that worked for the government are Democrats. Okay. But you know what? Democrats do it too. And the way that the Democrats have done it is like way worse than Republicans because it comes back to the kids thing. A huge portion of the left has basically removed themselves from the experience of child rearing. And I'm telling you, man, it changes you. It changes you. And it has probably the most significant effect on the future of the country more than anything else, because that's, the next generation of people. And you're going to have no hand in that because you don't want to have children. It's really crazy. And yet they still want to get online and make up all of these opinions about the way that we should be doing things in school and what parents should be allowed to do for their kids and not do for their kids, that are just absolutely so insane and out of whack with reality that is it just boggles my mind. For a politician that never worked a day in the private sector their entire lives from the ground up, wow. I think Bernie Sanders is probably probably the minority in that sort of a thing. There are definitely people that get into politics. So can I tell you something, like a little dirty secret about politics? Okay. Let me drink some water here. Okay, here's a dirty secret about politics. Politics is about class just as much as everything else is. And voters kind of have this unconscious leaning towards certain classes of people being politicians. And so there are people, I will see them, they will, they want to get involved in local politics, and so they'll try and get involved, right? And the way that they behave, the way that they talk, the issues that they want to talk about, etc., all kind of signal that they are like working class, and those people almost always lose because Americans, by and large, want you to be upper class or business class to be a politician. So there are a few politicians, particularly on the Democrat side, like Bernie Sanders is probably the most prominent example, of where he didn't really do any work before, not very seriously, before he became a politician. But he was perceived as being from the upper class for whatever reason, because he was like into the intelligentsia and the activism and things like that. He didn't present himself at the beginning, at least I don't think, as who was able to put himself into the politician class, right? But you're going to see very, very few people that are working class able to pull that off. So if you're going to like run for office and you don't have that kind of experience, that's where you fake it till you make it, right? Like, you've got to learn to look and talk and think like the business class in order for the majority of the electorate to accept you as a politician. Right? So that's how you can get people that have never really worked a day in their life. It's because they still came from like an upper class upbringing, or from a what do we call it? The universities and colleges and stuff, right? Because like, let me tell you something, okay? I don't think again, like my generation, because I didn't pick up on this stuff until much later in life, okay? But like, who can afford to be in the humanities, to go to school for like philosophy or archaeology? Some of these, what are some of the more humanities ones? Or like gender theory. Okay, like you get a degree in gender theory. Who can afford to do that? I'll tell you, rich people, right? People whose parents are already paying for the school. They may already have their life already set for them because they have a huge trust fund that they're sitting on, right? Art, yeah, there you go. Art's a good example, right? The upper class can afford to do those things, to spend their life just in academia, right? Because they already have the money, right? If you're I tell you what, like the craziest thing that you know that I could possibly see is, you know, you grew up in the ghetto and then you go to school and you go into gender theory or something like that. Like, man, you know, something that you can't make a living from. No. If you're a poor kid and you come from the inner city, the ghetto or whatever, and you make it to a top college, please go into engineering or a lawyer or something, you know, that makes money. Please. The rich people, they can afford to do that, right? And people, again, subconsciously pick up on this, that, okay, so if you're well educated, you have a really strong college education, that must mean that you're upper class. Still make that association. Even though it's not so strong, because almost everybody, well, not almost everybody, but like something like slightly less than half of people go to college, right? So that's how Bernie got away with it. I mean, part of the issue, though, going back to AXO was saying, you know, you get a politician that's never worked a day in the private sector their entire lives from the ground up. Again, one of the issues is like, okay, so like if I became a congressman, okay, maybe someday in the future I run for the House of Representatives and I'm a politician. I guess I'm getting to the age where if I was going to do something like that, I could do it. Probably be like 5 years from now, but I guess I could do that sort of a thing. My family was upper middle class. I went to school. My parents paid for university for the most part. That and a scholarship. I've been in computer science. So we've done pretty well. I think I could probably pull that off. I don't know if I have the interest in doing it, but maybe it happens. I do like politics. When you get into Congress, they put you on committees, right? So I would want to be on committees that are related, one, to technology, because that's the thing that I understand the best. Technology, social media, etc. And then two, finance, right? And you know what? I don't know if I should be on the panel for immigration policy. I feel like I know a decent amount about immigration and like what's going on right now. It's probably one of my strongest like policy interests out there, but I don't think that I have a good enough experience to actually like write the immigration bill. You know what I mean? But as a congressman, you're kind of expected to be able to be an expert in all of these things. I guess if I was a congressman, I would be spending most of my time studying laws and research on laws and trying to understand as much about these policies as I possibly can so that I can make good decisions. Would be a full-time job. Just studying. You know? But it's tough, right? The systems that we have are inadequate for the amount of complexity that we have in the world now. And yet we all still come through so confidently thinking that we know how to solve it. Right? Well, it's 8 o'clock. There are still a couple of things that we want to do here. So first things first, though, I should probably just come through, double check, make sure that I'm not missing anything significant here. You can see Elon Musk is still kind of tweeting around this morning, although I don't see anything too big. What's this? The Global Times has an angry response to the Financial Times article. On the one hand, soybeans, iron ore, crude oil, and beef are among the main components of Brazil's exports to China. On the other hand, China's exports to Brazil are dominated by manufactured goods such as electronic products, daily necessities, and other items. Such a trade structure is determined by the economic development of China and Brazil in recent decades. Okay, I don't know what that's about, but Brad Setster says, Brazil's decision to see tariffs against a slew of Chinese manufacturers is interesting. Setting Russia aside, the BRICS countries aren't exactly keen to maintain their current structure of trade with China. Trade war between China and Brazil, that's very curious. So that is something worth noting. Let's come over to Zero Hedge. First thing would be to not get bribed by lobbyists. Well, I don't know if, you know, I think that the general sentiment out there about lobbyists is like, oh yeah, the politicians, they talk to the lobbyists and then they get bribed and they do whatever the lobbyist wants, right? I don't think that it's quite so clear cut. I think the reality is that the politicians have to rely on the lobbyists for knowledge so heavily to be able to even do what they do. And that kind of gives the lobbyists a position of power that is probably bad, right? I think the real part of it would be you need lobbyists that kind of more represent the people's interests. And I mean, there are, but they're not as popular because where do you get the money for that? It's the whole thing. There are definitely some rules that should be put in place to kind of, like, for instance, I think that if you've been a congressman, you should never be allowed to work in the lobbying industry after that. That's like a huge one. But I don't think that would solve the problem either, you know? I think it's one of those things where most people would be influenced in the lobbyists in a way that is contrary to what is in the best interests of the people and not realize it, you know? Otherwise, I don't think it makes sense otherwise that, you know, almost every congressman is affected by this, right? Uh-oh. World's largest pension fund to diversify into Bitcoin as BitMEX sees price flash crash below 9,000 overnight. What? BitMEX saw Bitcoin below 9,000? That is insane, because it's like at 62. Whew. Crypto exchange BitMEX is currently investigating unusual activity involving large sell orders on its BTC USDT spot market. Overnight, this sparked a flash crash, dragging the price of Bitcoin down below 9,000, while the price remained above 66,000 on other exchanges. Doesn't seem like a very smart move for the rogue seller to dump over 400 Bitcoin at that time of day into an illiquid market. Why not wait until the US BTC ETF market is running its magic and sell into the liquidity? Yes, good question. Price of Bitcoin has been falling ever since. Spokesman for BitMEX said the company investigated the incident and found evidence of aggressive selling behavior involving a very small number of accounts that exceeded expected market ranges, adding that its systems had operated normally and that all user funds are safe. Okay, so that is supposed to be a statement to try and give people confidence, but that should actually be like one of the biggest confidence shaking statements you can possibly make, because what they're essentially saying is, BitMEX doesn't have enough liquidity to keep the price up there. That's what they're saying. There's not enough liquidity on BitMEX to keep the price up where it was to absorb that amount of selling. Which is what we've been saying the whole time. If Bitcoin falls, it's gonna like fall crazy because the liquidity is not there. We launched an investigation as soon as we noticed unusual activity. Despite all our systems operating normally, we identified aggressive selling behavior involving a very small number of accounts that exceeded expected market ranges. Our compliance is thoroughly investigating relevant individual accounts and will keep our users appraised of any necessary measures in the future. So someone dumped 400 Bitcoin over 2 hours in 10 to 15 Bitcoin clips on the pair, eating 30% slippage. They must have lost 4 million at least. Well, for all we know, it was like a forced liquidation, you know, like there could be plenty of reasons why they would do that. Like if you were involved in Bitcoin, why would you do that? Right? Unless you had to. The exchange later posted, this does not affect any of our derivative markets nor the index. Notably, yesterday saw the biggest net outflows from the Bitcoin ETF complex since inception, dominated by grayscale BTC liquidations, which is interesting given the timing of the flash crash and the fact that the former CEO of BitMEX, Arthur Hayes, previously opined that the spot Bitcoin exchange traded ETFs could completely destroy Bitcoin if they are too successful. Expression is my last article of 2024. I offer some thoughts on expressions of crypto. So do you think that it could be somebody like one of those big ETFs or something? Well, I don't think that they would, but who knows? If the ETFs ended up being bag holders, that would be a big problem, right? But not everyone is buying into that gloom and doom, as MicroStrategy, one of the largest public holders of Bitcoin, has completed another convertible notes offering to increase its Bitcoin stash. The notes sold an offering amounting to $603 million, including a $78 million aggregate principal amount of notes issued pursuant to option to purchase. I'm going to be buying the top forever. Bitcoin is the exit strategy, Sailor said. Additionally, as we noted last night, another potential source of Bitcoin price upside, FX reserves. Another large sticky cash pool which could follow in the footsteps of new U.S. pension money. Specifically, Kendrick said that the U.S. and EU sanctions on Russia's reserves have structurally increased the appeal of non-standard reserve assets. I don't know about that one. They've been saying that for like 4 years and it hasn't happened. The most obvious beneficiaries of this are gold and the CNY, but digital assets could also benefit, as they already have in El Salvador, where Bukele has previously purchased over 5,600 Bitcoin. Okay, but if you go over to BitMEX and try and sell that, the price would go to like 0, right? Okay. Which is why the Standard Chartered analysts see a rising likelihood that the large reserve managers may announce Bitcoin buying in here. And overnight, we saw Japan's government pension investment fund. Really? The world's largest pension fund manager, managing over 1.5 trillion in assets, has announced that it will explore. Oh, okay, that not quite yet. World's largest pension fund to diversify into Bitcoin. I am rating that headline as pants on fire false. Pants on fire false. Is that reasonable to call it pants on fire? Okay, they are investigating it. They are investigating it. They could investigate it and then come back and say, yeah, this isn't for us. I would hope that that's what they do. But we'll see. Is there anything else more than that? They will solicit information on illiquid alternative assets like Bitcoin, gold, forests, and farmland. While not currently invested in these assets, the move signals that the mega fund is actively researching options beyond stocks and bonds. The GPIF stated it seeks basic knowledge about the assets targeted for information provision and wants to understand how overseas pension funds incorporate them into their portfolios. With over 1.5 trillion at its disposal, even a tiny allocation to Bitcoin by GPIF could significantly impact prices and further legitimize Bitcoin. Yeah, except for that, they're not doing that yet. They're investigating it. You hold around 0.15 Bitcoin? Yeah. So long as you aren't buying just to sell. Well, I mean, you can trade it and try and play the cycles. You can try and play the long-term game. Apparently, most people aren't successful with the long-term game because, like, you go into an exchange and then that exchange, like, falls apart or whatever. But I want no part of it. I personally want no part of it. I don't think it's good for society. And I think that there's fraud at work there right now with Tether. So... Oh, okay. Yeah, have it in a cold wallet of some sort, you know. Wall Street bonuses fall for second year to 2019 lows amid capital markets freeze. Housing starts and permits surged in February despite plunging rate cut odds. If we build it, will the Fed cut rates? I don't think that we're going to have 3 rate cuts this year. Am I crazy? I think that we're going to have 1 or 2. Okay, nothing too much more there. Oh! I know, there's something I wanted to show you guys. Now is a good time too. Well, maybe I should have shown you earlier because I probably, wanted to do this when like the most people are around. We're doing okay. So let me show you something. I talked about this the other day, but I went and I set it up so that I can show you what it is. It's called edgeful.com. These guys, they messaged me. I'm not going to do like an affiliate link sort of a thing or anything like that, but I did think that it would be worth showing it to you guys here on stream and see what you think about it. I don't know if there's enough stuff here on it right now for me to want to spend my money on it every month, but it shows some promise. So what this is this is a website where for $30 a month, I think, you can get all of these reports about how different stocks perform. So for instance, we have this, let's see, a report type dashboard. Oops, that's not what we do want. SPY. Oh, okay. So like I can come in and I can say price action and I can say, which type do I want? So the first one they have is gap fill. So what happens? If there is a gap, 61% of the time the gap is filled. And they show you if it's a gap up and a gap down. Down here, they kind of give a little bit of an explanation about what it was, but I think that you guys know what that is. Oh, and they have a video. Cool. Okay, so what else have they got here? Do you see anything that you guys want to look at? Green and red days by weekday. Ah, yeah. So this one is interesting to me. There is, from what I can tell in my own research, some seasonality to like what day of the week it is. That's why I always point out like it's a Monday. Mondays suck. Like, Mondays are usually positive, but let's see here. They have one where they show you like activity, average true range by day. Oh, no, maybe not. High, low, close by weekday. Ah, okay. There you go. So Fridays tend to have the highest close count. Mondays tend to have the lowest ones, historically. So it's like Mondays, if they tend to be up, but only like very gently so. And then, you know, as the economic data comes out during the week and stuff, there's more for them to trade off of. They move more. And then you get the Fridays where there's, you know, often really, really big news releases and the market can move like crazy town. Okay. Could those help you? Maybe a little bit. Maybe a little bit. I think that especially that stuff I like. I'm much more interested in taking a trade on Wednesday, Thursday, Friday than I am Monday, Tuesday. Performance trends. So here, this is showing me seasonality to some extent, right? Like seasonally, going back to 2021, September is the worst month. Marches tend to be pretty okay. Man. I wish that there's stats I can, oh wait, date range 3 year, 5 year. I can go back 5 years. Cool. I wish I could go back like 50 years, but that's okay. For daily data, I want like 5 to 10. Well, for intraday data, I want like 5 years. For daily data, I want 10. So, but you know, like that's the thing is like if the service gets more popular, maybe they get better data. You know? FOMC performance. Now this is more interesting, right? Let's see here. Individual days, dollar change. What's that mean? Individual days. I don't know. But it looks like this is showing you how it moves overall. Interestingly enough, the biggest performance happens like around the close. 12 is when the release happens, right? They have initial balance stats. Opening range, 15-minute opening range breakout. Oh, I don't like that. Black is the one that's actually selected and blue is not. They should change that. They should be black and the one that you're on should be blue. Opening range breakout by performance. Let's see here. Breakout, average performance, breakout, max performance, breakdown. Oh, okay. Breakdown. So this is when they break out from the open. They tend to see an average of 0.39% and a max of 1.92%. Okay. By weekday, I can see which day. Oh, it changes by day quite a bit, actually. So on a Tuesday, they break down 56.86% of the time. And then this is standard is just like by everything. Oh, okay. So they break out 43%. They break down 50%. And that's over 3 years. So I want to do 5 year. Let's see here. You're 202 short, stop 205. Oh, it's not bad. Well, I mean, it's already pretty in the money so far, so. Target would be 80 to 85? That's a tough one. I think that I would probably be looking shorter than that. It depends on how long you want to hold it, right? So like I would look at something like, I want to hold it for 30 minutes. So like, what is the average 30-minute range right now? Right? Like we could do this. Well, they have I think with this one, indicators, average true range. Okay. Average true range is expected, or is respected 66% of the time. Doesn't tell you exactly what we want to know. This one doesn't. So let's pull up a chart and do it. We'll pull up a chart and we'll use ES. Right. And with this one, we'll do it on 30 minutes, 30-minute ranges. And for the trading hours, we will only use STH, which is, where is it? I know that well, maybe I don't have the STH hours on here. Maybe I didn't add those templates. So we'll just use RTH hours. Okay. And we want like the last 90 days, let's say. So Minek asks, does it work for futures? They told me that they will be getting futures data soon, that they're still looking at it. So I gave them a bunch of suggestions, like look at things like the spreads on the like the calendar spreads and the yield curve and that sort of stuff, because that's where I think he gets some of the most interesting stats. Okay, so here's this, and then I can come in and I can put on well, let's do my stats. Speculators, that's stats. Range histogram, and then I will also add on here my ATR. What is it called? Oh, that's the free one. That's why. Thought it was like multi ATR. There it is. Okay. So the average true range is 20 points. Oh, wait. We'll do it in ticks. 80 ticks for a 30-minute bar. Okay. Well, 81 is today, but 48. Let's just round down and say 40, because that would be 10 points. Okay. So 10 points from 52.02 would put us at 51.92. That would be like a more normal, right? So realize that in order for it to hit your target, that you would need a move that is larger than the standard move right now. And you would need it coming after 8:30. So I think if it was me, and I don't know what your situation is, why you took that trade, what you were going for, but if it was me, I would probably be looking for a closer target. Let's see here. They do have all these things, like, so here's volume, average volume and range by weekday. They have things about economic data for CPI. You can look at these different ones. Non-farm payroll. Oh, look at that. The amount of volume that you get. Wow, March was 2023 was a lot of volume. So another cool thing about this is that they have like, do you have new report ideas? Then you can email them and they will create them for you. Because I know that people are always asking, because I got all these stats, you know, and people are always asking, well, what about this and what about this? And usually it's kind of like, well, I don't think that'd be a very useful stat. But a lot of that is just that I can't spend the time to build every little stat. I guess if people were paying me, but then I don't really want to take money unless I really think that it's a stat that's really going to help you. You know what I mean? But these guys have like a whole development team and stuff. So if you have an idea, you can send it to them. then they might do it. As long as it doesn't hit $50 to $100, it has potential. Otherwise, convergent trading is superior. So there are some things that the convergent trading has that this one doesn't. But like for everything that I tell you what, I basically, some of these stats indicators that I have, these were basically built so that you could do what Convergent Trader does on your own. That's really what this is about. Like this indicator right here. Right? They're saying, you know, take 2 points. Take 2 or not 2 points, 5 points. Is what that says. It goes beyond, well, let's see here. To come in and change this to be by area. Sorry. Use area. So the blue is a little bit further out. It says, so basically what this means is that the value of all of these blue shaded ones, like the monetary value, is the same as the monetary value of these tails. So, just so you know, kind of shows you how much kurtosis there actually is in it. There's a ton, right? So for $30, that's kind of what I told him. I was like, well, for $30, I think that's okay, but like, you know, like I would probably rather be putting my money down on like like Spot Gamma, for instance. But if they continue to add more stuff and they keep the price the same, then it would be. Now with Convergent, you also get the community and everything, but I don't know. But then I come back to this thing that's like, well, I can get you the stats. Are those actually useful for trades? Because the one that I've spent the most time with is the opening ranges. But, you know, when I actually backtest opening range stuff, it's not a profitable strategy. So I think that a lot of the empirical, I think that the most useful stuff is kind of like knowing how the days of the week go. Now, you know, I don't know if you really need to see this chart anymore. Right? But it does show some promise. So that's why I wanted to show it to you guys, is thinking, well, maybe somebody that shows them something that they are looking for and they do end up getting it. And then, you know, the service continues to expand and they add more services and then they start pulling in data and data sources that we as retail traders don't have access to. And, you know, and plus, you know, whatever you say, I can relay back to them because I'll send them back an email today saying I showed it to you guys. Is that how you guys reacted? A decent number of you guys saw it here, but not too much of a chat about it. Is there any of these other reports that you'd like to see here? I come back to this price action one. Pretty broad price action, but consecutive green and red streaks, does that matter? Well, average number of green days in a row, 2.5. I am, a lot of people, they do this thing where it's like, okay, we had like a big up day. So like the chances that tomorrow will be a big up day are low. That's actually not the case. Like if we have a big up day, I love trading those. We had a big move the day before, I will come in and try and look for an extension of that move. For the momentum factor. Right? Max red days, 7 red days in a row, huh? Intraday timing. What's this? Average high time, average low time. Oh. The high and low of the day is at on average 1 o'clock? Really? Okay. So at 11. Lunch. Basically before lunch. Or like the end of lunch. That one is a little too sparse on details though. getting real nervous near the 203 level. 205 held. Let's go. Oh yeah, they did kind of bounce up there a little bit. Earnings performance. So another thing that's useful about this one is that I can look at individual stocks like Alcoa Corporation. How does it tend to react to earnings as of late? Last few years. They're up before earnings and then they sell post earnings. Cool. Pre-market range correlation. What's this? SPY. There it is. There's a lot of things in there defined. Correlation 0.67%. Pretty so strong, but not very strong. Was due to a volume profile setup. Wow. So if it's based on something so technical, first of all, I don't have a lot of confidence in those kinds of setups. But in that case, I definitely think that you would want to be looking at something based on the range that you're looking at. So in this instance, we're saying you would want something between 5 to 8. You know, you'd want somewhere in this range. Divided by 4. Yeah. Let's say 48 divided by 4. 12. So it wouldn't do more than 10 or 12 ticks. Anyways. Average consecutive bars. Green. Oh, that's interesting. So your average for consecutive bars in a row is 15. I've never thought about that one. That might be interesting to look for, because that might tell you, okay, like a holding period. And what kind of bars are we talking about? 1 minute bars? 15-minute candles in a day. But those are max and average. Average green bars is 4. So if I took a trade, probably don't want to be in it more than an hour. Well, that kind of matches up with what we know about, large meta orders. It goes up and then it kind of goes, and this is like 45 minutes and then it takes off again. So if you've been in it 45 minutes and it doesn't take off again, then it's probably not a good trade. Right? Intraday range window. Oh, yeah, this is probably talking about like. This one doesn't seem to be. Oh, no. I can change the range and see what it is. I see. Previous week's range? They touched the previous week high 65% of the time, really? Well, over the last 5 years? Yeah, that probably is the case. So, yeah. Interesting website. They did not pay me or give me anything to do this. They did talk to me. I had like a little sit down with one of their guys. I thought it was interesting enough to show you. I think they kind of want me to do an affiliate link thing, but I'm not going to do that. Because I don't see myself paying for this every month. But I did think it was interesting enough to show it to you guys. Because I kind of want to see where they go with it. And I know there's a lot of people that are looking for that sort of stuff, so. And I can bring it, I'll have it for the next week. So if you want me to bring it back up, and look at something on it, we can certainly do that. Let's close this. What else did... Oh, and then the other thing that we want to do before we get going today is we want to go and take a look at our stocks, right? Oifin. Watch lists. If there's anything, the correlation between two instruments, no. But that would be a really good one for you to request from them, right? Wouldn't it? Correlation between them. I don't know what you mean by how often they sync and desync. I don't know how you would express that. Is there some sort of statistical measure that can express that? That'd be really interesting to me. Okay, so let's see here. One day, silver not doing so hot. First Majestic, at least, not doing so hot. They should be up over the week, though, shouldn't they? Yeah. 1 month, 18%. That's about right. Rare Earth looks like it's just kind of still going sideways, huh? Wait, where's the price? 1.6, yeah. They were at 2, weren't they? I have to pull the chart. They were at 20 cents. Oh. Oh yeah, here we go. I was like, that doesn't look quite right. Yeah, actually closer to the bottom end of the range, but they were at 20 cents at one point, so it's down a little bit. MicroStrategy down pretty big overnight. As is Coinbase, actually all of the meme stocks are down big. The WAC down, DraftKings, ARK is down, Nvidia is down 2%. So it's not as bad as some of the meme stocks, but they are down. As is Meta, but Amazon and Microsoft are okay, and Apple is okay. That's a very curious market today. We could do it in terms of comparing green bars in their range to NQ green bars in their range and compare them to see how far of a standard deviation move they both make. So you could say if this bar is green and this bar is green, and then you compare, what percentage of a move they both were and how close they are to each other. And then you could do a correlation of that, maybe? Like you run the correlation on their percentage changes. I don't know if that would be any better than just doing a correlation on the prices, though. See, so if I was going to go and make a suggestion to them, I would definitely want to have that sort of stuff already figured out, right? Because there's this whole thing of like, okay, here's an idea, but then you go and you program it, and then you pull it out and you look at it, and it doesn't tell you anything, right? And then you really want to program it yourself. But if you have something that you know is, like for instance, I know that there are momentum funds that look at what the price of the front month future is relative to the back month future, and whether we're in contango or backwardation to determine, whether they want to go long or short that commodity, right? So that would be something that you could do stats on and would be valuable. What is the average spread, for instance? So what we have right now, an unusually high or unusually low spread, historically speaking, that would be valuable information to know, right? I can pretty confidently tell them to go and try and program that it would be useful. Okay, rare earth minerals looks like they're down this morning. ARRNF hasn't traded today, apparently. Boomer stocks are doing pretty okay today. Okay, new nuclear stocks are not looking so hot. uranium going down really big in particular, and New Scale just, oh man. What is New Scale's SMR? I always forget the ticker symbol because it's weird. Okay, so they pulled back considerably from that peak that they Monday. Wow. So I was looking at this day over here and being like, that is a little bit wild. Shall we come over to finance.yahoo.com and see if there's more conversation on this? Because I feel like there's got to be more to this insane run that SMR has had recently. Cheesecake Factory down 1%. Oh, but Sleep Number up 3%. That's pretty good for a consumer discretionary. Ooh, Super Micro down 10%. Man, that Super Micro is so insanely volatile, isn't it? Good grief. Almost all of my tech stocks on the watch list are down today. There they back are at 52.05. Even like it's getting hard to even get 10 points. I guess you would have gotten 10 points on the other side. Oh, close to 10 points on the other side. Freeport McMoran down. But defense is up. Energy, like oil, energy stocks are doing okay. Zillow is up today. Let's look at that. Okay, Zillow is finally like recovering from that absolute slaughter that they had 2 days ago. Financial. Only JP Morgan is in the green. Yeah, semiconductor space, similar to the tech space, but I have AMD and Intel in there separately. Pretty negative today. And what about dogs of the Dow? Most of the dogs are positive today. That's interesting. And who's doing best? Amgen Healthcare. Gotcha. And the worst is Dow Materials. You took a break even on the second contract on the stop run. Oh, okay, that's good. Yeah, because then you kind of give yourself a little bit of a better probability there for sure. Yeah. I still don't remember why. Every time I come down in here, I'm like, why do I have FG on there? What is FG? Annuities, life. Okay. AI. Well, Soundhound isn't, 6%. That could be worse. Autos are doing okay. So it kind of looks to me like we're getting a mean reversion day today is what I'm seeing. What about evil stocks? Ooh, Comcast down 80.86%. That's not pretty. Wendy's 0.58, biggest winner over there. Oh no, Bayer is down 1.13. There was another stock I wanted to add to the evil company, but I can't remember who it was. Well, maybe I'll remember. I'm spending a lot more, trying to do these lists. Like you did some stuff. I got a lot done yesterday, and I get these done today, and then I need to do the registration maybe on Friday or Saturday. Maybe I can do that Saturday morning. So I'm remembering things way like this meticulous note taking. I'm only like 2 days into it. I'm super into it. I've found it really, really valuable for me. I'm going to continue doing it. Oh, which reminds me, it's probably now a good time to talk about what's going on. Treasuries. So let's see here. Equities, very tight. Treasuries, slight move to upside after I'm going to use my time. 6:30 news. No trades. Oh, actually, this is no trades. trades. This goes down here. Discussion was, we talked about is illegal immigration increasing crime? We're too sure. We what should I say? We how do I say, you keep ourselves out of valuable experience. Keep ourselves from valuable experience. How do you spell the experience? And we looked at Edgeful, and we looked at the. Let's come in here. Stocks review. Anything that I want to point out important, particularly important in there? I would say NUS or SMR. New scale. Pulls back significantly from strong bull run. That's the one that sticks out to me the most through all of that. Is there anything else on there that we want to highlight? Yeah, let's point out that meme stocks doing very poorly. Underperformers such as dogs doing well. Right. Yep, I'm really enjoying it. I also really love writing with this text editor. I mean, I've always kind of liked Vim, but I really, really like this one. Better than Vim, in my opinion. So we'll close that. Still got about 5 minutes. Maybe the bust these highs again. I mean, it looks like the treasuries are still kind of on a little bit of a bull run. I would say that since that initial move off of after the news, that the volumes have been kind of pretty sideways and flat. So I think that my kind of prediction about we'll probably rotate around 0.2 the rest of the session, I'd say that that's mostly true, but there is a hint that it's gonna go to the upside again. And maybe they could, especially if the auction does well. If the auction does well, then they could really shoot them out there, right? And it is a 20-year auction, which tends to do pretty okay. It is, yeah, it's a 20-year. But, it's probably still going to be very, very tight today. Probably going to be very tight. I didn't really check Reddit a whole lot, so we can just kind of come through here, check Reddit for the last 5 minutes. Yeah, trading. I missed this comment from Minek where he says very different trading one ES like I used to. It's way easier to trade multiple contracts just from a psychological perspective, because you already kind of got a winner in there. You know that, like, worst case scenario, you're gonna break even. Yeah, it's a lot easier. Just realize that the kurtosis of it's messing with the kurtosis, so you need to be prepared for when it's not working to be able to handle that drawdown and, understand why your strategy is not working and why it's playing out the way that it is, and just not trade it until it's a more favorable condition. R/ADHD. Are there any successful people who take ADHD medication? I'd say I'm successful. I like to think I'm successful. I know that there's lots of people that are successful with ADHD, so it's kind of a funny question. What the heck? R slash advice animals. It has this embarrassed kid, and it says, I used to eat entire chicken bones along with the chicken. Okay, I mean, I enjoy eating like the cartilage and stuff from the chicken sometimes, especially when I was a kid, but like, how do you eat the whole freaking bone? That's crazy, dude. That's crazy. Oh boy, here we got another one from CS Career Correction questions. Given this take-home assessment, 24 hours to complete, am I dumb or is this insane? I tend to so what I tell people when this has happened in the past, I did that once and then I was like, never again. I tell them, if you want to give me a take-home assessment, you have to pay me. And you have to have very, very clear objectives about what it is that you're looking for in the code. Because when it's just kind of like a spitball test sort of a thing to see your coding, you know, how do I make the decisions on how to write it without some objectives about, like, we're looking for performance, so you want me to write it quickly, you want it to be flexible, like what matters to you the most here? So they have to have very, very clear requirements, and they have to pay me. And otherwise, I'm not interested. But to do it in 24 hours, well, what is the question? On my resume, they listed R, Python, SQL, and C#. Hey, this guy sounds like, is this me from like a different timeline? Because I know those are all of those things that I do. Okay, logistic regression, analysis of variance, applied research, predictive statistics, data visualization, concept testing. I also have experience in education, mostly in the tests and measurements realm. Recruiter was really excited and thought I'd be a perfect fit. She asked me to do this take-home assessment in 24 hours. Now, like an assessment is a different thing because almost everybody will have you do some sort of like test or assessment. I have no experience, never claimed to have experience in Databricks, AWS, data architecture, or warehouse management. I have interacted with a data warehouse, made ETL programs, and have used SQL. That's pretty much it. I'm not sure if this assessment is a test to see how I will approach this or if the recruiter picked the wrong candidate. How should I approach this? Should I be honest with the recruiter about this? Is out of my domain. And here is the objective. Recommend a robust data architecture to facilitate unified near real-time analytics for a diverse, growing group of data stakeholders. They want you to be a data... Yeah, they want you to be a data architect rather than a, you know, data analyst, I think. Or a data engineer. Yeah, a couple of thoughts. As a data engineer, the system they are looking for would be quite impressive, not quite cutting edge, as FANG companies would have much more data, higher velocity, but it would be a tier below that and definitely something designed by someone with a dozen plus years of experience working on those things. It is, yeah. Their scope does kind of make me think that this person, like I would maybe be unqualified. Well, I think I could probably opine on that, but it would be a role that I wouldn't necessarily be looking for. I don't know if a data architect role is something that I'm looking for right now, right? But I could probably do it. I could probably do it. It's just that, like, that's not what I'm looking for. And the fact, you know, that they would ask a question like that kind of makes me think that they're asking crazy questions and that they're looking for something way above and beyond what they actually need. Is what I kind of suspect with that one. That's interesting. Obsidian Futures, good morning. Hey, what? You're late, man. We're like just about to go. Actually, there's the ding that's like, Seth, it's time for you to leave. And I think I will. I'll leave right when I'm supposed to today, because I think we've done. You know what? We had a good session today. Yesterday I kind of felt like I didn't have much to talk about. I started browsing. I kind of lost track. I think there was a couple of good things that we discussed. I was able to go through all of this, get all of the things out of the way. Looked at Edgeful. Looked at the stocks. Got a great example profile here for our daily notes. So I'm pretty happy with that. Had a busy morning. Wanted to say hi. Well, oh my gosh. I appreciate so much that you think of me enough to want to make sure to at least come in and say hi before we end for the day. I tell you what, man, I will put this up against anybody. I really do think that I have the best streaming audience in the world. It's a small audience, but what we have here with, a really tight-knit group of guys that are here every day, and the kinds of interactions that we can have, and it's just unique. It's unique. I really appreciate it. Okay, guys, but I should get going. I will see you tomorrow. Tomorrow's the big event, FOMC. I'm starting to feel the electricity. I think that one could be big. Lewis Hill, does that include me? No, I've never seen your name before, but it won't be very long before you're part of the team. So I'll see you tomorrow, 8:30 Eastern time, and then we'll be here for the FOMC as well. In the meantime, stay excellent, team.